Hi there, it's Trisha, and I wanted to go over a couple things from yesterday and today. I am actually out of town, so I'm not trading. But anyway, we use two setups using three charts with indicators for confirmation before ever taking a trade. And you can go to www.easyemintrade.com and check those out. I do want to point out to everyone that you should be trading the June contract now, not March, because we do have more volume on June right now. This is a 5-minute chart from yesterday, and I'm showing you this because yesterday it appeared, again, I have not traded, so I just want to point that out. I did not trade yesterday or today or on Wednesday either, but I want to point out that the market moves straight up, and oftentimes it's hard to find a place to jump on board, especially, sometimes when we're not really getting any significant pullbacks. So we really didn't have anything setting up on using our setups yesterday for that specific reason. But I did want to point out on a 5-minute chart, if you put a 20-period moving average on it, you realistically could buy every time the price pulls back to the 5-minute moving average. Now, that is only to do, I would only use that when you have the market running away either up or down and you're just looking for a place to jump on, because in a regular trading environment, this is not going to work. So again, it is just when you have a runaway market that you can actually take advantage of this. So in this case, every time we closed above the moving average, you can enter in above the bar that basically closed above the moving average, and it's just a simple 20-period moving average. So you enter a quarter tick above, put your stop a quarter tick below, and then you realistically can use the moving average a quarter below it and just trail stop. And realistically, you would not have been stopped out all day yesterday. Now, again, I would not do this every day, just when we have this this kind of market environment. Also would make sure that the tick followed as well. I would not take a trade if you're at extremes of, in this case, plus, basically plus 800, plus 900, plus 1,000. You just want to take notice of those areas, because realistically, when you're getting the pullback, that's when you're getting your extreme readings of plus 900, plus 1,000. 800 is still questionable. So as I was saying, realistically, you could still take something at the plus 800 or plus 800 or minus 800, but anything in the 9 to 1,000 or more range, definitely wait for the pullback and then look for your setup. This is today's charts. You can see on our longer tick chart that the price action is really just, around our high and our close from yesterday. And then we go lower and then we finally go back up. But we would need price to get above the 50% mark from the high to the low, and that is around the close from yesterday. So really you need to wait for price to break out above the high, at least I do, in order to take a long. Now this bar here that we have this arrow on, we have a setup occurring at 2:34 Eastern, and we have this over a little bit. Price going down, indicator going higher. We have our first blue dot, so you could take that trade if you're comfortable in taking it when this bar is not closed. And in most cases, when we do have our countdown bar that we're using, telling us how many ticks are left before the bar completes, we might jump in on something like that. But in this case, I would tend to wait, just because you can see this bar 3 bars earlier, it came up to that same area and then closed below that high from yesterday. So, again, I would need confirmation that it was going to close above that and then look for a setup. So I'm pointing it out just because the setup is there, with the exception of this longer tick chart bar. So, just something to consider when you're taking the trade. Also for me, I think that probably this has gone into overbought just for a little bit longer than I would like. So I realistically would have passed on that. Now you could take that and you would have got your plus 2, and then you would have trail stopped out at 752. So you would have had a gain of like 1.5 there, plus your 2. It never did get to plus 4. The next trade that set up was at 3:17 Eastern, and you can see you got price going sideways, indicator going higher, you've got the first blue dot to go long, So you can take that entry, approximately 753.50, and those obviously are just approximations since I did not trade, so I'm just guessing at where you would have gotten filled, but somewhere around that area. And I think the high that you would have got there, the most that you would have got was 1.25, but you would have been trail stopped out for a gain of 1/4. So nothing great there either. Also, my ADX is below us here, and usually I'm just showing that part of the chart so you guys can see it, but our trend indicator was above 20, and this still is my 2-minute chart. I just am showing you that trend indicator just below the smaller tick chart, so you can see it, but don't be mistaken, that is not on my smaller tick chart. So anyway, I hope that helps. Also would like to point out on the tick chart, when you get extreme readings of plus 800, plus 1,000, or minus 800, minus 1,000, as I've said, you want to wait for the pullback and then get in your trade, because if you get in a trade when you're getting those extremes, the price is going to pull back and could very easily stop you out. Now, the exception to that would be if you have a lot of extreme readings, then they're less relevant. So I just want to point that out and remind everybody of that. I've actually updated the ebook with that information, and I will try and get that out to everybody this week. I will be back probably back in my office on Tuesday, so not sure if I'll get to trade or not, but I will try and do a couple videos if I don't get to trade, but I am intending to. So I hope that helps, and you can check those out at www.easyeminitrade.com.